Welcome to our webinar today. As people start coming in, we welcome you to put your name and affiliation in the chat so we start seeing where people are coming from today, and we will get started shortly. It's great to be seeing all of our Northern Forest states and partners represented here. Really appreciate you coming, and I think we're probably ready to get started. Hi, and good afternoon. My name is Maura Adams. I'm the Director of Community Investment for the Northern Forest Center. And I'm so happy to have you join the latest webinar in our Building the New Forest Future series. Today's topic is place-based impact investing. I'd like to take just a minute first to thank my colleague Isabella Ronson at the Northern Forest Center, who is the mastermind behind these webinars and helping behind the scenes today. Today's session is being recorded, and all links and resources will be shared following the webinar, along with a link to that recording. Before I introduce our panel, I want to give a very general description of something very complex, which is what we mean by impact investment. So traditionally, investment is return first. So getting the highest possible financial return without necessarily any consideration of social or environmental impacts. And by contrast, impact first investing seeks a positive, measurable social or environmental impact, while also preserving capital and delivering a modest financial return. Our speakers are going to tell you much more about how they are using impact investments for the betterment of the Northern Forest. Just as a point of reference, all three of these speakers' funds are only open to accredited investors, which is an SEC requirement. Accredited investors have to meet certain wealth, income, or financial sophistication criteria. You can check your qualification in the link there, but our speakers will also be talking about some ways that people who aren't accredited can invest differently in their communities. We are going to have opening remarks today from all of our three panelists, then go into a discussion among them, and finally spend some time responding to your questions. You can post questions at any time. Please use the Q&A function instead of the chat. That just helps us manage and keep track of the questions throughout the webinar. And also, please do feel free to use the chat, as many of you have been doing, to introduce yourself or share resources you're aware of with the group. So we wanted to start with a really quick poll so our panel can get a better understanding of where people are coming from today, what you represent. And so we ask that you answer this one question about your role. And I am not seeing results, but maybe that's a function of how Zoom results are, poll results are set up. Isabella or other panelists, are you seeing results come up? There we go. Thank you. All right, great. So this really does run the gamut from investors, nonprofits, some of all these sectors represented. I think that's actually really helpful. And the way that that the panelists and I have been talking and the questions we've been preparing, I think will generate something that's of of value and interest to all these different sectors. So that's great to see. All right, so I'm happy now to introduce our panel. We have people from representing and working in all the Northern Forest. We first have Janice St. Onge. She is president of the Flexible Capital Fund, or the Flex Fund, which is a low profit LLC that provides flexible risk capital to Vermont's food system, forestry, and clean technology businesses. She's based in Stowe, Vermont. Bryan Wentzell is based in Portland, Maine, and is the executive director of Exemplary Forestry Management, focused on forest land investment in Maine, and also directs the Maine Mountains Collaborative. He's in Portland. And my colleague, Kristen Sharpless, out of our Concord, New Hampshire office, is the center's director of development. She successfully led our team to complete a $30 million Northern Forest Fund campaign this year, and is now launching a second impact investment fund so that we can continue investing in middle market housing across the Northern Forest. So with that, I'm going to invite Janice to start with an introduction to her work.
Great, thank you so much. Appreciate the opportunity to be here. Again, Janice St. Onge, president of the Flexible Capital Fund. So this is just our intro slide. Go ahead and do the next slide, please. So who are we? Well, we are a low profit limited liability company, and also known as a community development financial institution. I'll talk very briefly about that, whose mission is to create healthy food systems, preserve working lands, build resilient communities, and address climate change. And we do that through our investing in companies in New England. So not just Vermont, but all of New England, providing regenerative solutions and equitable workplaces. We've been doing this for 12 years. We've put out 9 million to 24 companies and are winding down our first fund and in the process of raising capital for our second fund. As I mentioned, we are designated as a CDFI, and that means that it's a rigorous process that we go through to access US Treasury dollars on a periodic basis. We are women-led and managed, and we're mission-driven. So it's first and foremost about mission with financial returns. And I also believe we are a leader in innovative investment structures. If you can go to the next slide. So where do we draw our work from? We are looking at the UN Sustainable Development Goals. There are 17 of them, and we focus on a number of them. So gender equality, affordable and clean energy, decent work and economic growth, sustainable communities and cities, responsible consumption, climate action, life below water, and life on land. So broadly speaking, our work is focused on investing in those companies that are doing this work, systems change work, and building a better future for all of us. Next slide, please. So we are an investor in companies. So we do provide flexible capital to help companies in New England grow. And our primary sectors are food systems, forest products, and clean technology or climate change solutions. And we do this through a unique investment structure called revenue-based financing. It is actually considered a debt instrument, but it can take on more flexibility and more risk than traditional debt can through a bank or a community lending entity. But we don't take ownership in the business like an equity investor or a venture capitalist. So we can be flexible without having decision-making and without forcing an exit strategy on that business. Next slide. Oh, I guess that's it. I wanted to just provide an overview so that you understood kind of where we fit in that capital continuum and who we work with. We are New England, again, raising a second fund. So I'm gonna leave it at that. And so we have more time for a conversation.
Thanks, Janice. Let's go to Bryan.
I suppose I should unmute, huh? Thanks, everyone. Bryan Wentzell, Maine Mountain Collaborative and Exemplary Forestry Management. So the Maine Mountain Collaborative is a group of 11 land conservation groups working across the 5 million acre Maine Mountain region. So that's an area about the size of the state of Massachusetts. We came together in 2014 to figure out how we could work together to innovate and accelerate land conservation across this really important ecological region. And as we were looking to figure out how we could do more of our work, innovate the financing, we could we use this form of capital to achieve our conservation outcomes in the Main Mountain region. And if you step back, why would we go down the road of impact investing? Most of land conservation is done with private philanthropy or foundations or public funding. If you look at all of the environmental funding in the country in 2024 is about $21 billion. That's out of a total of 592 billion total philanthropy. Impact investing was 87 billion in 2024. So it's a pretty big number, but it's another potential pipeline to find capital to achieve conservation outcomes in the landscape. So we went on a multi-year journey and launched. And the idea is that is a fund to bring in impact aligned capital to purchase the Main Mountain region and manage it really in kind of the best way we know how, following exemplary forestry management standards, which were developed by one of our founding partners, New England Forestry Foundation. And really that's about balancing long-term timber value and growing long-term timber value on the forest, carbon and climate change, wildlife habitat, and I would add local community values to that. So our goal is to own and manage 100,000 acres in the region by 2030. And originally, I'll get into a little bit like our journey here. Originally, we wanted to create an evergreen fund where we're really owning land in perpetuity in the forest and managing truly long. And it turns out investors want to know when they're going to get their money back. So that was a first catch for us. So we have to talk a little bit about our first fund. And originally we wanted to have a big, a pooled fund, which is the way traditional timber investment entities work, where they'll pool capital and then go out and purchase funds. And as a first-time fund, we really needed to really find the property and secure an option and let investors know where their investment was going to be, which timberland and what our plans were for it. And so that's what we did. So our first fund, actually go ahead to the next slide. And so really we're about, main focus, slightly smaller properties than some of the bigger timber owners, exemplary forestry management, and we've got local forest management. Go ahead to the slide. And really this is a team of partners that have come together behind the Exemplary Forestry Investment Fund. And the manager of that fund is Exemplary Forestry Management. And that is actually a 501c3 nonprofit. So the manager, typically with investment funds, that might be a for-profit investment entity. In our case, it's a nonprofit, which is kind of what we're all, many of us are talking about here. But we've got some great partners and early funders behind us, and here's a snapshot of who they were. So for the next slide, our first, we originally envisioned a pooled fund, but like I said, we went to a property-specific fund model. So our first fund was a Scammon Ridge Headwaters Fund. This is a fund specifically to own and manage 3,000 acres in Greenville, Maine, near Moosehead Lake. And this is looking at the Scammon Prong Pond. So really beautiful property. It was really important to the community that it have some conservation. Really on the top list for local land trusts or the state to own. It made sense for private ownership, but with an easement, and that's what we did with the Forest Society of Maine. We sold a conservation easement to the Forest Society. This, you can go ahead to the next slide. So this is a 5 to 9 year investment fund, 3,000 acres. We've got 3 individual investors, 2 foundation investors, including the Maine Community Foundation and the Sewell Foundation. Our revenue comes from easements, timber, sustainable timber management, environmental services. So that could potentially include carbon, NRCS programs, or other programs that get paid values on the property. And then disposition will be 5 to 9 years out. And ideally, our plan would be to sell it either a second fund of ours or to a conservation type buyer. We care who the next buyer is. We've got 94% main investors, and our next fund we're working on now is about a 10,000 acre property in Western Maine. So I'll leave it there. Sorry, I went a little over.
You're great. Thanks, Bryan. All right, Kristen.
Great. Good afternoon, everyone. I'm Kristen Sharpless. I'm the Director of Development at the Northern Forest Center. It's great to be with you today and our colleagues who've gone before me. So I come to this work, which is leading up our fundraising team at the Northern Forest Center, which is a regional nonprofit, from a background in conservation. Both forest stewardship and education, and also land trust, land protection work. And what really drew me to the Northern Forest Center as an organization, and to the work that we do through our place-based impact investing program, is the integrated approach of the center. So I consider myself a conservationist. I'm sure many of you on the call do today also, and a person who cares deeply about the people and the place across this Northern Forest region. And I was really inspired by the work that the Northern Forest Center is doing in not only advocating for, but creating middle market housing for people who live and work in this region, and really are essential for community vitality and supporting the economy and ultimately the health of the forest itself. So this is the area that the Northern Forest Center focuses on. The area in green is 30 million acre area from the Adirondacks in New York, the Northeast Kingdom in Vermont, the North Country of New Hampshire, and up through the North Woods of Maine. And we have regional programs that span this entire region, but our community investment work that our impact investment program focuses on really hones in on 10 communities shown here in orange across the region. So we consider these the places where we're putting place-based impact investments to work in combination with an integration with other programming. So we have been doing impact investing in these communities and raising capital for projects in these communities since 2017. And we've secured over $20 million in impact investment funds that we've paired with another 20 million almost in other sources of capital. So we do donations, gifts, grants, and things like tax credits to make these projects go. So we can look at the next slide. This is our approach, holistic approach to showing up in communities and supporting community revitalization. So I just wanted to show you how the green box at the top, where impact investment funds are actually being used to create housing and mixed use properties through redevelopment and construction, are paired with a whole set of other approaches to supporting community revitalization, from trails and wastewater systems to partnering with local schools and supporting local leadership and capacity. So that's kind of how our housing work fits into a holistic approach to community investment. Can move to the next slide. This is our general model, and from an investor's perspective, how investment funds are used through our investment cycle. So we work with individuals, families, foundations, a variety of accredited investors to accept fixed rate loans that are paired with other grants, gifts, and capital. And we use those through a regional fund, our Northern Forest Fund, to acquire properties in our focal communities that our regional staff work with local advisors over probably a period of years, often to help identify really key important properties that make a big difference if restored for overall community revitalization. We then, in our own shop, work with contractors to renovate or build the buildings and properties, and that allows us to ensure high quality, high standards of efficiency and sustainability, and ultimately pricing that is within that middle market range. So ensuring that we're providing quality year-round housing for people who live and work in the community. Once properties are done, we rent them, if they're rental units, to local people in the community, and those rents ensure that we have the cash to pay our investors an annual interest payment, and to cover our operating costs. After 7 to 10 years, roughly, we sell the properties. We put deed restrictions on them and have ways to try to ensure that the units stay in service to local housing needs. And the income from those sales then is used to repay our investors at the end of their loan, or folks are invited to reinvest in a successor fund and continue the work. Next slide. This is an example of a project that we recently completed in Bethel, Maine. This is the historic Gehring House. You can see in the top left picture there, that's what it looked like when we purchased the property with our investment funds several years ago. It was unoccupied, falling into disrepair, and really an underutilized asset in the community. So we were able to restore and renovate the building, turn it into 9 year-round middle market apartments, which are now fully occupied, and use a holistic, sustainable building approach that ties into other aspects of our mission. You can see his restored, beautiful hardwood floors, a new modern wood heat boiler in the basement, and some examples of excellent local craftsmanship that we were able to use in the building. So this was a almost $6 million project, and you can see the kind of recipe of capital that we brought to that. So impact investments were almost half of that capital, but we were also able to bring in tax credits and gifts and grants to cover that full cost. And that's something that as a nonprofit housing developer and impact fund manager, that is somewhat unique to our model, that we can pull in all these different sources of funding that might not otherwise be available to us, and not allow us to do some of these really challenging projects that are not within reach for other organizations or developers. Thanks.
Thanks, Kristen. So I want to go back to Janice and give you more of a chance to talk about the companies that you've invested in, because you went so quickly at the beginning that I think you didn't get enough of a chance to tell us about some of those companies that you've had success with. So take however long you need to tell us what it is you've been able to accomplish there.
Thank you so much, Maura. I appreciate that. I was zipping through thinking I wanted to make sure everybody got some good time in there. But yeah, I think one of the things I wanted to just emphasize about the companies that we invest in, these are all legacy industries, our natural resource sectors that are so important to our Northern Forest community across New England, that are really challenged with getting risk capital to grow and be successful and stay in their communities. And so what we found when we launched our first fund was that there was these same companies in food and forestry and clean energy that were really had good management teams, good growth opportunity, and really fulfilling the mission of systems change in their sectors. But they couldn't get, at the time when we launched back in 2011, the credit market had dried up. So bank debt, and even community lenders were having challenges providing debt to them because they didn't have an operating history, or they didn't have collateral, or the wealth behind a personal guarantee. And yet they were never going to be high enough growth, high enough margins for a venture capital firm, which we had one of in Vermont back in the day. We now have a couple of more equity investment funds in Vermont, but it's still hard capital to get if you're in that moderate growth legacy industry sectors. And so they weren't going to be able to get that kind of capital either. So we knew there had to be a different way. So when we were looking around as what the market need was when we launched, and this remains the case today, is this flexible risk capital to help companies grow using permanent working capital, to hire people, to do sales and marketing that a bank might not lend on because they don't have collateral, and that an angel investor or a venture fund is just never going to find attractive enough to grow and sell, at 5 to 10 times their money. So these were really important businesses to our community. So over the years, as I mentioned, we've invested in 24 companies. About 40% of them have been in the forest products sector, food systems sector, and then remaining, in clean energy and climate change solutions. And what we're looking at is these businesses, especially in forest products, that are innovating, right? They're doing things in a legacy industry that haven't been done before. So an example of a company that many of you in Maine must know is Tan Bark Molded Fiber, who's providing an alternative to single-use plastic using wood pulp from the northern forest in Maine. They're providing quality living wage jobs. They're helping us get off of our addiction to single-use plastic, and they're doing it right in a small community in Maine. So that's a really good example of a business that's highly mission aligned, providing a solution to our addiction to fossil fuels and plastic, and doing it in a way that they're providing good paying jobs with benefits in their communities. So I just wanted to make sure people understood kind of what our premise was, and really focusing on those companies that are really at risk of not growing because they're not finding the right match of capital for the stage of growth and the scale that they want to grow to. And the kind of capital coming in from an impact perspective is so important. So that's why our investors, as all of you have talked about, are understanding that this isn't just about a financial return. It's about the social and environmental return and the systems change that these companies are making. They're willing to be more patient with their capital in. They're willing to accept a return that might not be venture return, but knowing that the three-legged stool of sustainability, of financial, social, and environmental, are really, really important.
Thanks, Janice. So that is a question that I wanted to ask all of you is, first, just who invests in your fund? Is it individuals, businesses, foundations, others? And what have you heard about their motivations for investing in these types of funds rather than putting their money somewhere more conventional?
Yeah, I would say for us, like I mentioned, we have 3 individuals who all care a lot about forestry, and then 2 foundations that it's part of their mission. So I think it definitely is a dual mandate of we want to see true impact on the ground, that good things are happening in the forest, but also can we get a moderate return, and we're initially talking about 3 to 5%. Where right now with higher interest is tough, but really we want to match investor expectations with the true ecological carrying capacity of the forest. So we don't want to ask the forest to meet our over promises on return. We want to really kind of be careful about management and expectations.
Yeah, and I can jump in and share for the Northern Forest Fund and our impact investing funds at the Northern Forest Center, we have all kinds of investors. So the types you mentioned, Maura, of individuals, families, foundations, businesses, corporations, institutions. I think we got our first investment from a faith-based organization. And I think building off of both what Bryan and Janice shared, that all of those investors share a common focus on mission alignment. They all are passionate about this place and about the forest and communities, and believe in the power and potential for the work that we do to change lives and strengthen communities. And they want to be a part of it. So not for all, but for many people I've spoken to, I've heard that one of the things they really love about investing in our work is that they can go to the buildings that we're redeveloping, walk through them, see them, touch them. It's a very intimate experience that you certainly can't have, when you invest your money in the stock market and get a statement. And even if you read, kind of about what's going on, that you might be affecting change in align with your values. This is very concrete and tangible, and comes with real stories about lives that have been impacted by being able to move into an apartment in a community where someone lives and keeping their job, or being able to be close to family when there really are very few to no other options available like what we're providing. I think another thing that I've heard from people recently, given a lot of kind of chaos and uncertainty and worry about what's going on in the world, is a desire to know that their money is being put to work locally in ways that they can trust, are having a benefit for their not only things they care about, but their local place. And so that has, I think, increasingly felt like a really compelling reason to explore other possibilities for how to invest and where to put money to work in this moment.
Yeah, and I would just say, ditto to everything that Kristen has said in terms of who our investors are. They range from individuals to nonprofit organizations, for-profit organizations, and a shout out in particular to New England's foundation community, because they've really stepped up and really demonstrated how important it is to use all of their capital to really invest in our communities beyond the grant making component. So we have a strong relationship with our community foundations in New England. Vermont Community Foundation is one of our lead investors, New Hampshire Charitable, and starting to work a little bit with Maine Community Foundation. So really excited to have our 3 community foundations engaged in regional investing, because we are really talking about the fact that the Northern Forest spans from New York all the way to Maine and in between. And our food system is regional. We don't, Vermont cannot live on Ben and Jerry's and maple syrup alone. So we need our seafood. We need, other forms of food coming in, and to be self-sufficient as a region, given where things are at in this country right now, I think is a really, really important component of the work that we're doing with the businesses we invest in. Some of the motivations of our investors range from, all of what Kristen has said, alignment of mission. They can invest their capital in us without having to manage the day-to-day activities of a portfolio of companies. It allows them to see what their money is doing in the communities where they live and work. And I think the other piece for some is it brings diversity of investments across a portfolio of mission-aligned companies. So all of the things that Kristen said and more. The one thing I would add too is the opportunity these days that we're seeing more and more of is to use a donor advised fund, whether it's with a community foundation or a platform like CapShift or Realize Impact, to use your donor advised fund as grant dollars to then invest those dollars in funds or businesses that are in alignment alignment with your values. So donor advised funds, we have a few folks who are using their self-directed IRA to invest in us because they don't want to put it all in the public markets. So a variety of ways that people can invest and organizations can invest in funds.
Thank
I also
you.
just want to give a shout out to the Adirondack Community Foundation among our community foundation supporters. I think we have some folks on the call there. So yeah, really important partners in this work.
So what have you been able to accomplish using an impact investment fund tool that you wouldn't have been able to otherwise? And sort of related, what can investments accomplish that philanthropy can't? why not just rely on the kind of philanthropy that we're accustomed to?
I have just a quick anecdote that might illustrate that. We have some supporters who pose the question of, would you rather have a $5,000 grant or a $100,000 loan? And so really, like $100,000 loan, please. And the $5,000 grant is kind of been our motto, because you can, in that example, really see that the scale of capital that you can raise to do work is vastly different if you're relying on grants and philanthropy alone. There's not only kind of a threshold of giving that you kind of hit as a ceiling that doesn't align with, at least in the context of purchasing and redeveloping property, it doesn't match up with the scale of the need, nor does it really align well with the timeline of the market. So when we have a property that we want to purchase, we can't wait a year, for grant funding to show up. Which isn't to say that the philanthropy isn't important, but I think the impact investing has both unlocked the scale of capital needed to do the work and is provided flexibility and a nimbleness to be able to show up and act quickly and then have control of the property, so that then we can do additional fundraising and pull together, other forms of important funding to fill out the full need. So impact investing alone in our context doesn't get us all the way either. We have a very integrated approach to the importance of philanthropy, gifts, grants, tax credits, other forms of capital that we can kind of pull in and bring together. But it is extremely important for really getting up above a threshold that before doing these impact funds we just couldn't achieve.
And yeah, I was going to say, Bryan, is that similar for in your situation? I see you nodding.
Yeah, absolutely. If we had all of the either public funding or philanthropy we needed, we might not need to, go down this pathway. But I would also say, so that's a piece of it. It's a new pipeline of capital to achieve, these public goods that we want to, whether it's community or environmental. And also, I think for our land ownership model, so the manager of the fund is a nonprofit, but the fund itself is a for-profit. It's an LLC. And in some cases, in some of these communities, with Scammon, for example, it purchased the land. It didn't make sense for the state to own it. It really kind of made sense for private, what a lot of these communities are familiar with, for taxes and just land ownership structure. And so we are a private entity owning land just like it's been known for a long time. So there's a certain, I guess, cultural, political comfort with private land ownership. But at the same time, we can be a really proactive and hopefully good neighbor and landowner, selling a conservation easement, working with local nonprofits like we are with Scammon Ridge on, just having people out on the land, what are the expectations and desires around recreation access and management. So in some ways, this is the conservation community kind of invented the landowner it wanted to work with, that would sell the easements that wanted to buy as a, and be a good private landowner, working with the local community and doing the type of forestry that I think is being taught at the University of Maine today. And we also very clearly don't want to. We are not meant to compete with the traditional conservation strategy. So if a land trust were to say, "Hey, we are really interested in purchasing this," or a state agency, we would back right out. If those are the best solutions, then that by all means that should happen. But when it makes sense for a private landowner, with our goals and motivations, and to work with the conservation community, that's definitely where we see ourselves.
Janice?
Yeah, I will just add that, using the impact investment fund as a tool has allowed us to really focus on sustainable growth. So really meeting the needs of the communities and the entrepreneurs within the means of our planet. Because we have investors who are aligned with us in this impact. We've been able to provide more patient, flexible risk capital that's been innovative, that just right now is not flowing to our natural resource sectors otherwise. And our investors really understand the need to flow that capital to underserved entrepreneurs and rural communities. And also they are focused on helping us support diverse entrepreneurial teams. I think investments combined with philanthropy is a very, very powerful tool. So I don't want to diminish. I think philanthropy is absolutely needed in addition to and in combination with investments. Investments provide that mechanism to get to return and recycle capital for continued impact. And for us, it provides us a way to partner with an organization or with our investees to really accelerate this work of systems change. So I think it's a tool that has allowed us to do more than just philanthropy can do alone. Together, they are extremely powerful. The grant combination with the investment tools.
Yeah, we are seeing that, as Kristen was saying, seeing that all the time in our housing projects. So as we've established, all of your funds do require accredited investors by statute. Are you aware of any ways, or do you have any recommendations for how non-accredited individuals can participate in place-based investing, or support their communities in this way?
If you don't mind, I was just going to say, I think it's important for everybody to understand that you invest your money, your time, and your energy every single day. Something as simple as going to the grocery store or local farmer's market is an act of investing your dollars. And it can take many forms and shows up as many ways. So we invest in our food, our forests, our home, our children, ourselves, our 401k, our retirement plan, our savings account, directly into business through a community loan fund. For example, community loan funds are a great way to place your money as a non-accredited investor in ways that actually impact the communities, both on housing and business and childcare side. Your credit union is a great place to invest as a non-accredited investor. There are other organizations like CNO, which is a platform that allows you to invest in other CDFIs like ours, who need capital to then invest in their communities, donor advised funds. So there's a number of ways that you can do this. And I'm happy to follow up with anybody who wants to have a further conversation about how to do that as a non-accredited investor.
Thanks. Any other ideas, Kristen or Bryan?
Something we haven't mentioned, returnable grant or recoverable grant, where you sort of have an agreement that, so I guess this is really more philanthropy that, here's a grant, and maybe you guys have used this at Northern Forest Center. The expectation is that we'll return your capital, same amount. But, for some reason it doesn't go right, then the understanding is that, you may not get it back, and that's kind of part of the deal. And then, I think we also have the opportunity because, in Northern Forest Center, I think, Kristen, you guys, this is really what you do, and we'd like to get more into this. As a nonprofit, Exemplary Forestry Management can receive donations, grants, but we could do that and turn around and put that into the fund. So we become using philanthropic funds and then become investors in our own fund. That's a way that someone could, participate and make the whole thing work philanthropically, and then understanding and get recycled back into the next project.
Yeah, I think Janice and Bryan covered a lot of great examples, and I did notice Jake from the Vermont Community Loan Fund wrote into the chat. So there may be those in the audience who are connected to organizations that, similar to the loan fund, provide these types of investment opportunities to non-accredited investors. So feel free to put more of those in the chat.
Yeah, thank you for that, Jake.
And yeah, I think as Janice and Bryan were talking, concept both of just being thoughtful about where we spend our money, and that, you know, those transactions really translate into investments into the things that we care about, the businesses, the communities, the places, the forests, and also the idea of supporting organizations like community foundations who are innovating and investing in funds like ours and in other ways in communities is, you know, kind of a indirect way. If you don't have a fund at one of the foundations, but still really want to be a part of that work.
So we are getting some really great questions in the Q&A that I think I might start turning to, and we have some other ones that we talked about earlier, but I think we can get into some of these as well. Someone is wondering, do any of you offer grants or loans to build local capacity that may in turn leverage your impact and create an enduring local advocate? And if not, is that something you've maybe considered or would like to try?
It'd be helpful to understand what they mean by local capacity.
I could maybe give an example of my interpretation of the question and how we do that. And then Robert, you could clarify if there's more to it that you're interested in. So in our integrated approach to community investment, in that visual of the green box on top of all the brown boxes, within those brown boxes of other ways that we're investing in communities is definitely one of the core strategies, is to recognize that often in small towns and rural communities, there are significant gaps between the potential and vision of local leaders and the capacity and resources available to turn that vision into reality. So the Northern Forest Center, outside of our impact investing work directly, has a long history of investing in local leadership, helping to provide capacity and resources for things like accessing federal funding and complex grants, and, you know, I think in a variety of other ways. And more, like, you should feel free to chime in as our director of community if there's something important there that I'm missing. I don't think that we've you know, done that in the form of offering loans, but certainly in the form of offering grants in our own, you know, staff's time, expertise, and ability to access resources that otherwise might not be available.
Yeah, built into the structure of fund, there's a thing, interest, which is a common thing in investment funds. But basically, if the fund meets a certain return profile, if you know, do well enough, the manager gets a certain cut of the profits. And since we as the manager are a nonprofit ourselves, the idea is that we would still get carried interest, this sort of bonus if we do well enough above a certain return number. And the whole idea is that would go back into communities, that as a nonprofit, we don't just keep that, but we turn around and support local recreation or conservation groups around where that project is happening. So we've got a few years before that actually plays out, but it's something we thought a lot about in how we set up the structure of these funds.
And maybe I'll interpret this a little bit differently, but when you talk about building local capacity, I think our work, especially around food systems and innovation in the forest products industry, is really about investing. So we do provide our investments are debt, higher risk debt, to companies that are really not just building on their success as an individual company, but they're impacting the entire value chain in the food system space or in the forest products space. So they are building capacity for their both with their suppliers and providing a mechanism to offer local purchasing, and then to their customers who are using those products in ways that are building more resilient communities. So I guess I would answer it that way.
That makes a lot of sense to me. So how do you think about impact measurement? What indicators do you use to define success? And the question is, are they often forward looking or impact forecasting, or backwards looking, what impact was created, or some combination of the two?
I mean, I can start. So, I mean, before we even look at investing in a business, there's certain thresholds that we're looking at. Are they paying living wage jobs? Are they supporting their communities through local purchasing, those types of things? So those are goals that we want them to already have in place. And then on an annual basis, we do look back and do an annual impact report that looks at our have they grown the number of jobs? Have they created more jobs? Are they living wage jobs? It's not just about that they're creating jobs, that they need to be living wage, good paying jobs with benefits. Are they in their sectors, for example, are they reducing carbon emissions through their project development work in renewable energy? Are they capturing carbon in their projects related to the forest products industry? Are they providing innovation in reducing or eliminating fossil fuels types of thing like tan bark with their molded fiber packaging? And are they paying a fair price to their vendors? So for food manufacturers, are they in their local purchasing, are they paying a fair price to the farmers so that they can have a living wage and maintain the working landscape? So those are the things that we measure on an annual basis, but there's a certain threshold of company that we're going to invest in. They need to already be in alignment with the values and mission of the organization to be able to then help support them to continue to grow in a sustainable way.
Yeah, and for us with timberland, it's, probably some typical metrics that folks know about. We can talk about cords per acre in terms of stocking. We're really thinking long term, looking out 40 or 50 years and asking, can we that's going to set us up for a forest that's going to have more stocking in the long term, hold more carbon, have better wildlife habitat. And then we can think about, how are we a partner with the local community in terms of access, communication. I know as we start thinking about our forest management next year, we want to communicate out to local folks who live in the area and say, here's what we're thinking, here's why. Invite them to get out on the land and look at it. I mean, really, the more that we can encourage folks to have a relationship with this place and understand what we're doing and why, and if that timber is going locally, if we're doing carbon credits, that revenue is landing in Maine, which isn't necessarily always the case for a carbon credit, depending on who the owner is. And then I think ecological protection we've done after we purchased the property, we did a much deeper dive on ecological actually have here, and what really needed to be thought about and paid attention to, maybe beyond what we realized when we purchased the property.
Great. In our case, we have some pretty tangible, discrete goals in terms of the number of units of housing or homes that we're creating. So I think I mentioned we have a goal of creating 100 homes across 10 communities within the region over a 10-year period. And we're 88 homes in that are complete or under construction or under development, with construction beginning in the next year. So that's a pretty tangible impact and outcome that we track. And we also have 10-year outcomes that map onto some of those UN Sustainable Development Goals that Janice showed in her introductory slide, that are really more about longer term community revitalization and looking at indicators like demographics and the fact that the region has really suffered an exodus of young people who don't feel like there's opportunity or a place for them in their communities, or where the communities have struggled to attract new residents who can help revitalize the workforce and provide capacity for communities. So looking at School enrollment is one metric that we track within focal communities, and also just population under 45. So that's an example of kind of a longer term change that we're really interested in helping to influence through our community investment work, looking at property values in communities where there's been a real divestment in the real estate and a lack of investment, and looking at local businesses and how they're doing and thriving, looking at forest and land stewardship and conservation. Those are also related outcomes that we're very interested in influencing, along with things that are not as tangible or measurable or discrete, but really important, like community pride, and just the belief from community members that their community is thriving, that it's a place worth investing in, and with a lot of potential and possibility for the future. So some of that we track, through data, and we also just pay a lot of attention to stories. So for example, in Lancaster, New Hampshire, where we did a revitalization of what was the worst building on the block in Main Street, which was described to me by a local business owner and investor and someone who grew up in the community, as the land of the Walking Dead 10 years ago. That it was just a very, in his view, had really transformed from a vibrant place in a very short period of time to a really quiet, just not vibrant Main Street. And his interest was in turning that around, and are taking that worst building and turning it into the best building on the block really led to a cascade of other investments, part of which were already underway, but were buoyed, I think, by our investment in that building and other investments in the community, and together have really, Lancaster is a wonderful small town, and has been all along, but is really experiencing, I think, some significant changes in the feel of Main Street, and businesses that have come in to empty storefronts, and additional housing that has been created for local workers, along with some other really great transformations. So just kind of listening to the stories of people in community and how they're perceiving some of the evolution of what's happening, and is a really important part of what we pay attention to and try to share out through stories, and in addition to the metrics and the data.
Thanks, Kristen. Yeah, I was wondering if others could share, and maybe you can share another if you're interested, Kristen, but sharing a favorite impact story, because we've talked about kind of these high level conceptual impacts, and they're great, but what are some of what do you feel really good about having made happen through the work you're doing?
I guess I'll start. I mentioned earlier our investment in Tanbark, which is based in Maine. And, again, I think very highly mission aligned from the standpoint of looking at how do we mitigate climate change, how do we get off of fossil fuels. And plastic is a big issue that we're facing across country. It's single-use plastic in particular. And so here they've taken a legacy industry, the main forest legacy, and created an innovative solution that's both reinvigorating, hopefully, the forest products industry in Maine, but also eradicating single-use plastic, getting it out of our stores, getting it out of our food, getting it out of our medical supplies. And so, I think, and again, using local wood pulp to make that happen. They're not only are they doing that, but they clearly have a market-based solution, because year over year they've grown their revenues 200% over from 23 to 2024. And I think their goal is really to solve this modern problem of plastic waste and create stronger communities in Maine and build a better future for our children. So all of those resonate with us. They have quality, they've hired 13 people, of which 92% of them are being paid a living wage, based on the MIT survey, which is like $24 an hour or something along those lines, for a production, a manufacturing facility. That's plus providing full health benefits, time off, retirement plan, et cetera. So those are the kind of companies that are having real impact in our communities and rural communities in across New England. So we feel good about that work, and the fact that they're also providing a market solution that will provide us a return on our investments. So it's fulfilling that three-legged stool.
Awesome.
I would say,
Thanks, Bryan.
oh yeah, I would say, with Greenville and the Scammon Ridge headwaters, 3,000 acres, right, actually in the town of Greenville. So it's kind of the backyard to a lot of people, for the town really, and also because it's got elevation, you see it from a lot of different vantage points. And it was zoned for, before we purchased it, zoned for 20, 40 acre lots, 17 or 20, 40 acre lots across the high point of the ridge. So and I thought, not affordable housing, this is not going to be workforce housing. And so with, the easement, means that won't happen. And it also means that we'll have sustainable forestry forever, and public access. And in the short term, at least, there wasn't a big desire on the part of the community and folks that lived in the area to have a lot of trails on the property. It was really, we like some of the forest roads, we like to ride our bikes on them, we like to walk our dogs. So it's less of a recreation destination and more of like, this is our backyard. We kind of like it the way it is. And there are other parts of the Moosehead region that are getting that more intensive recreation development. And so really it was kind of the backdrop for a lot of people's just day-to-day lives in Greenville, and developed.
Thanks. Kristen, do you have another story you'd like to share?
Sure, I love to share all the stories, but I'll just piggyback off of Bryan's Greenville and the connection to Maine and Maine businesses. We have, if you remember the map I showed at the beginning with the orange dots, Greenville is also one of the Northern Forest Center's focal communities, and we have a 5-acre lot in town. So in between the hospital and the school, and within walking distance of the waterfront on Moosehead Lake, that we are working to develop into 29 middle market, a neighborhood of 29 middle market homes for people who live and work in the community. And it struck me as you were talking, Bryan, about, the zoning and number of homes that would have been allowed to be built on this forested ridgetop, right? Like, not a great place from a conservation strategy to be building homes, and probably not going to meet the community's needs for housing for local residents. And so we really view our strategy of creating an opportunity for dense construction of homes, really specifically for that community market, as a conservation strategy, because when you pair it with that working forest or landscape scale forest conservation in appropriate places, then you really are holistically supporting both the forest and the community need. And one of the really cool parts of this project, which is just beginning in terms of construction, is that we are striving to use a market innovation in terms of using mass timber for the construction of these homes, and working with an emerging company, a startup company who's developing the technology and the plans for these homes, and doing it in a way to really try to make them affordable and priced within this middle market range, as a approach to both using local or regionally sourced wood potentially in an innovative product to meet a community housing need. And so one of the things that I really love about the Northern Forest Center's model is that we do a lot of partnership and work with forest-based businesses and in providing various types of support and funding and partnership, and can help try to bring some of these innovative ideas to market. And we're providing a place in Greenville for really kind of testing out the new approach to doing just that. So we don't yet have impact stories to share, but in a year when we do this again, maybe we will.
Yeah, and I was actually at that company's headquarters in Chicago yesterday and seeing some of the latest and greatest. It's very exciting. And I would suggest that everybody keep an eye on what we're doing in Greenville because it has really transformational potential. So that's just another plug. If people have more questions, please do enter those in the Q&A. I think we've gotten to this one a bit, but could you say a little more about how you talk concretely about returns to your investors? Is there a financial return? I think in all of your cases, yes, but also returns in number of housing units, acres conserved, jobs, and I think this is particularly interesting. Which elements of those are your investors most inspired by? You know, what's the most common, like, oh, I really am excited about that particular mission return?
I can start. So it's been interesting along the way over the last 12 years since we've been doing this work. We have different levels of engagement of our investors. Some will invest and hear from us as we do our quarterly reporting and attend our investor meetings and have a conversation. Others we rarely hear from. So I think financial return is important to them from the standpoint of capital, getting their committed capital back. And then, however, given the type of structure that we have in the investments that we make using revenue-based financing, we've been able to provide a return, I think, better than you might expect, given that it's a self-liquidating investment structure versus an equity investment where you have to wait for the company to sell. So we've been able to distribute capital back to our investors starting in year 4 all the way through year 9 on a regular basis. And so financial returns are important to them. We've averaged our internal rate of return based on our portfolio valuation today is around that 4 to 5% mark. But what's been more important to them, because they're in alignment with the values, is the social and environmental return. Are these companies doing what our mission is all about, which is building healthy food systems and resilient communities and supporting climate change solutions? And so those are where I have, frankly, had more conversation around the work of what we're doing, which is why our impact report is a good measure of the progress that these companies are making in the value chain that they sit in. So I think those are important components. The other piece is I just wanted to bring up this idea of risk, because I think we often talk about financial returns based on the risk that we're taking. And I really thought a lot about what does risk mean. And risk as a noun means danger or peril. And I think that's how we tend to use it right now in our financial dealings. We're taking risk, well, we got to avoid risk or whatever. But if you change that around to the verb to risk, which really means to be adventurous, to be brave, to move the money, right? So I think about risk. We are a risk capital fund. We're being brave. We're moving money to enact systems change. And so we need to make sure, at least in my mind, that think about the organization that we're investing in and being brave and moving the money to help them do the work that they need to do. We're a facilitator. So I'll leave it at that, but that's kind of how I frame risk and return.
Yeah, Bryan and Kristen, how do you talk about or think about risk?
Yeah, Janice, I think that's a really great point. I'm glad you brought that up. And I think for us, um, obviously, there's the risk in terms of timber ownership is not zero, but if we do nothing, uh, and and so one of the things that people like about timber is markets. If the market isn't good now, you wait a few years and see if it comes back. So you have some flexibility there, and we don't have the fire risk that some Western forests have, and we've got a robust forest products market here in Maine. Thankfully, a good forest products ecosystem. So it's not risk free, but relative to investing in a tech startup where you might make 40% or you might make nothing, we feel like this is a pretty a relatively safe way to go. Uh, and Also, it's really that connection, like you were saying, Kristen. You can go out and walk the forest, like you can touch the trees, you can watch timber being harvested. Uh, Tell our investors, what we're thinking about, what we're planning, what are the values, what are we trying to accomplish with our timber management. Ideally, it's hands-on. You can see it, you can understand it, and really value the habitat, the long-term timber value, the climate benefits, the community benefits. I think our investors understand the integrated goals that are all together. It's not one thing, but it's that you can do all of these things in the forest. You can store climate and harvest timber at the same time, store carbon for climate change, and harvest timber that are going to local mills at the same time.
I think that in terms of risk, the way that I've heard some of our investors reflect on, the investment opportunities that we provide is actually thinking of them as relatively low risk or a relatively safe bet in terms of financial risk. Because a lot of our work is very much contained within the purview of the Northern Forest Center, so it's very direct. The same people who are talking to investors and raising the capital are tied into the projects themselves and helping to shape the building redevelopment or construction, have relationships in the community, relationships with the contractors, right? And then ultimately relationships with the tenants. And so it is a very, I think I used the word intimate experience before, for an investor to feel very connected to all the different pieces that go into the full kind of process of actually getting to the endpoint of having a building that is fully rented, that's generating income. And I think real estate right now, as an asset that has value and is expected to maintain at least a certain level of value, is considered a pretty safe bet. I think that Janice's point about the risk of inaction being compelling is something that is, although maybe not expressed exactly in those words, very motivating to investors, right? There's a real concern of if we don't do anything, then things will get worse, or we will continue to lose some of the things that we really love about this region, about this place, these communities. We're worried about the future of the forest and people who live here. So this is important. Housing has been, a realm, I think, that has really resonated with a lot of people. A feeling that things are not good, they're getting worse. It's really hard to find housing, and what are the possibilities for how I could help with that issue. And this is one that I think is compelling. One among, you know, many other options for how you can make a difference in this realm. I think the one other piece of the original question of just the how do we talk about returns? I mentioned a few different ways that we report on and track different metrics, but I think just to make sure it's clear, our funds do provide an annual interest payment. So in addition to having principal returned on a loan at the end of the term, there is an interest check that investors receive at the end of every year for, you know, a fixed rate percentage on their loan. And I think for our investors, often that feels extremely meaningful, right? Differentiates between really a full-on grant or gift and feels like it's not market rate, but it is meaningful to have some financial return, you know, on that investment that they can count on.
Thanks, Kristen. We have a question for Janice. Revenue-based finance seems really well suited here. What do you think are the barriers or bottlenecks to wider adoption of this model? Do you suspect we'll see a lot more revenue-based finance in the future? And if you wouldn't mind making sure everyone understands what revenue-based finance is exactly, that would be great.
Absolutely. So let me first explain what revenue-based financing is. It is a loan, and it's we make a loan to a business, for example, who may need to hire a new employee or to do sales and marketing. It's typically something that isn't an asset, for example, like a hard asset, rather, a piece of equipment or piece of real estate, because that is the permanent working capital or working capital to hire people to do sales and marketing is very hard to come by because traditional lenders want collateral, they want a personal guarantee. We don't require either one of those things. So essentially so I'll give you an example. Maura, you need $100,000 to hire 3 new employees because you have a growing sales pipeline. I say, okay, great, we're going to lend you $100,000. The way in which you're going to repay that is you're going to give us 2% of your gross revenue over 7 years until you get to a multiple on our money. And let's say it's 1.7 times our money. And once you've paid me $170,000, whether you do that in 3 years or 7 years, you're done, you move on, the multiples hit, you've fulfilled your obligation to us, but you've used that permanent working capital to hire new people to grow your business, to now get a higher threshold of revenue so that you can sustain it and hopefully get a traditional loan with a term loan that might be a little less costly. We're not low cost money, but we're much less expensive than an angel investor or a venture capital fund who's looking at 3 to 5 to 10 times their money, right? So revenue-based financing is a flexible instrument. It doesn't lock you into a principal and interest payment from day one. If you have no revenue, you don't make a payment, which means you're not in default of your loan. And unlike a term note, where if you don't make a principal and interest payment, you know, if you're late or 2 or 3 months late, the lender will typically call the loan in default, and you'd either have to repay it or modify it of some way, shape, or form. So it really can be a way to attract, it can be a structure that allows you to pay a lower monthly payment based on your revenue when it's at a lower threshold, and then it can grow over time when you have the ability to make a higher payment. It's locked in at a fixed multiple. You don't have to pay more. Once you've met that multiple, you're on your way. You don't require collateral, a personal guarantee, and you don't have to give up ownership. So those are kind of the basic fundamentals of it. It's a riskier investment than a traditional loan from a lender who wants to secure their loan with a lien on your piece of equipment or piece of real estate and wants a personal guarantee because they have a third way to repay their loan if you don't repay it through cash flow. So it is riskier, but it's self-liquidating, unlike an equity investment where you have to wait for the company to sell. And why it hasn't been more widely used instrument, I think, first of all, we tend to think we think binary as in the financial system. These are the debt or there's equity, right? And we have just now started to think more creatively about how to structure investments in companies a little more creatively. So that innovation is happening. Revenue-based financing has been around for a while. We've been using it for a decade, but we've learned the ins and outs of it. So from an accounting perspective, it's not as easy to account for as it is with a traditional term loan. There are things you have to do on the backside, but it's all easily worked out. We are seeing more partners in New England using this structure, in part because we have a number of folks like the New Hampshire Community Loan Fund, Coastal Enterprises have all participated in revenue-based financing notes with us to learn how to do it, and then to actually implement their own program. So CEI now has a small pilot program using revenue-based financing. I would love to see more investors, more lenders using this as a tool, as one of the many tools to invest in businesses to help them grow, because it's non-dilutive to companies who just can't get equity investment or don't want to give up ownership in their business, which is a lot more rural businesses in New England than you might think.
Thanks, Janice. I am interested in your take on this question from Karen McCarthy. I might need a little more context for it, but she is asking, how might we be considered as a municipal entity in interest? Starksboro borders the Green Mountain Forest and has more maple trees than residents. We are interested in investment in housing and recreation industry that supports a thriving nature habitat. So maybe one of you has an interpretation of that question. I'm not sure if she's asking, how would they start an investment fund, or how do they access, someone else's, one of our investment funds, but maybe either way, or, however you interpret that question.
Maybe I'll jump in part because when I first moved to Vermont, I lived in Starksboro, so I was one of those first residents. Karen, it's a beautiful community and a beautiful place. So I think I don't have a comprehensive answer to that, but I think might be it from the perspective of the Northern Forest Center and how we support other communities in the Northern Forest region in learning more from our models and exploring different opportunities for accessing the types of resources that you're describing. My recommendation actually would be to reach out to Maura and to learn more about what we do through our community investment program. If the question is a little bit more geared toward like how would a municipal entity access some of the capital that's raised through funds like this, or even start one of their own, again, I don't have the best answer to that. Probably, I think for the Northern Forest Center, our Northern Forest Fund is very targeted in terms of where we're deploying capital around those 10 focal communities. And that's in part in recognition that, $30 million sounds like a lot, but when you start trying to put it to work, it can go fast. So we have to be kind of thoughtful and strategic about where we deploy that. But we're definitely committed to have other types of programs to help share our model or connect communities in the region with resources. And I think this is not my area of expertise, but I've learned on the job, that this is impact investment funds are really a legal structure. And so for anyone who might be listening in on this call and kind of curious as a nonprofit or a municipal leader, like how would we create one of these? It's really a legal question and something worth learning a little bit more about the kinds of structures and entities that can hold these funds and what sorts of things you need to do to be set up. It's not as quick as saying, well, we'll take loans from people and, and then we'll pay them back. So there is some complexity to it and some technicality that's important to is beyond the scope of this call, but certainly good to be aware of. And if you felt like it would, if this is in line with your question, worth digging into a bit further.
So we just have a couple minutes left. Do any of you have any burning things that you've been really wanting to say that you didn't have, you weren't able to earlier?
I just had a kind of a question for Janice. In your position, you get really good insight into these cross-sector businesses across rural New England. Do you find yourself collecting that can be shared upward to policymakers or with partners like Northern Forest Center that you're going to know more than a typical bank opportunities and challenges of some of these communities and businesses?
Yeah, so I didn't quite, you broke up just a little bit. So there's something about what's the heart of the question? Sorry, I couldn't.
So, all right, you have good insight on these businesses that you're investing in. What are you seeing for trends and challenges that can be shared with policymakers or across with partners?
Gotcha. I have to say, I wrote a whole piece on this because it was weighing on my mind about the things that we've learned over the last decade working with these businesses. One thing that I don't think people think a lot about right now, because it seems so far in the past, is that there is still a COVID drain on businesses in New England. Like there's still companies feeling the effect of COVID that just have never really bounced back and really just need more capital to get back on their feet. They need people to have faith in what they're doing. And so I think COVID is still a real issue for some businesses, especially in the legacy industries. I think the other piece is capital is really hard to come by, and what's happening at the federal level with federal funding being taken back is really impacting not just for-profit business or nonprofit businesses, but for-profit businesses that have seen some of those funds come in different ways, whether it's through the SBIR program or through CDFIs. Even we as a CDFIs are being challenged because some of that money is being held up. So the economic environment between what's happening at the federal level, COVID drain, and then honestly, interest rates have impacted a company's ability to raise capital. It's harder and harder, and it takes longer and longer. So just being aware that it's going to take a company longer to scale up and grow and be sustainable over time than we think it will. And they need a variety of kinds of money, not just what we're doing, and not just grants and term debt and revenue-based financing and equity. They need at some point some combination thereof. And I think we got to remember we all have to work well in the sandbox in New England to support businesses with the different kinds of capital that we bring to the table.
All right. Well, thank you so much, Janice, Bryan, Kristen. And thank you all for joining this webinar today. I think we could keep talking about this for quite a while, but everyone has put their contact information and links in the chat. So I think we have plenty of opportunities to follow up if you have more particular questions. We would love to thank USDA Rural Development and other funders for supporting this series. Isabel is going to put a link to an evaluation of this webinar in this chat. Thank you very much. You'll also be receiving a follow-up email with a link to that evaluation and recording of the webinar. The Center's Forest Programs team is going to be hosting a webinar on September 16th at noon, a really, really important one, with some regional forest policy advocates and liaisons on the current wins and losses for the Northern Forest in recent policy packages, including the recently passed One Big Bill and the evolving federal appropriations bills for the next federal fiscal year. And if you haven't already, you can sign up for our email news digest, where you can learn about future webinars, other Northern Forest Center updates, and general news from around the region. You can also select just a particular geographic or thematic focus, so you only get things related to your interests. And lastly, if you've been enjoying this and others in our series and want to support this work, and the broader work that the center is doing, please consider donating. A link to our donation page is going to be on the website and should be popping up in the chat. So with that, I'd like to thank all our panelists one last time, and thank you all for joining. Have a wonderful afternoon.
Thank you very much.
Thank you.
Nice to
Thank
join
you,
you all.
Take care.
everybody.
Thank you.
Thank you.